Hey everyone, welcome back to another insightful edition of Market Views. I'm your host, Kudakash Taimo. Excited to unravel how our markets performed for the week ending 14 November. And as usual, we're going to unpack the movers, the shakers, and the stories behind the numbers, and wrap it up with what to expect in the coming days. So do stick around with us as we unpack and break down what stood out and what could be next. Right. The ZSE All-Share Index advanced by 1.77% or 177 basis points over the week, driven mainly by the medium cap index, followed by gains in the top 10 and the top 15 indices. Meanwhile, the VFX All-Share Index slid by 3.74% or 374 basis points as INSCO replaced Padenga at the top of the board. Market activity strengthened across both exchanges. On the ZSE, turnover jumped by 91% to 168 million ZiG, up from 88 million ZiG which was recorded in the previous week. That 88 million was itself a major leap from 24 million which was recorded for the week ending 31 October. So November clearly has been a month of rising activity, and of course we'll get into the specific counters that drive that surge. On the VFX, turnover climbed by 40% to 2.3 million from 1.7 million last week, which again was a big jump from the 686,000 recorded for the week ending 31 October. So activity is also trending upwards on this USD denominated exchange. Now, let's get into the juiciest part of it, the counters driving the action. On the ZSE, Delta dominated turnover once again recorded 135 million ZiG, contributing 81% of total trades. Econet followed with 11 million ZiG, which is circa 7% of the weekly turnover. Last week, the same two counters led the board, Delta at 83% of the weekly turnover and Econet at 11%. Both of these blue chips, they released their half-year financials for the financial year ending 2026, with Delta reporting its financials in USD and hosting its analyst briefing last Wednesday. Meanwhile, Econet reported in ZiG and is yet to hold its analyst briefing since it's been a while now since it lastly did. Over on the VFX, FCB and Padenga led the turnover chart, contributing 71% and 24% of total trades, respectively. INSCO recorded just 57,000, about 2% of weekly turnover. Quite a shift from last week when it dominated with 87% of total weekly turnover. This week's trend clearly reflects significant institutional investor activity, particularly in FCB and Padenga, but we'll unpack shortly whether these counters were movers or shakers. For now, let's look at the foreign investor participation. Foreign participation surged across both exchanges. On the ZSE, foreign buys jumped from 60,000 to 329,000 ZiG, while foreign sales soared from 59 million to 117 million ZiG. On the VFX, foreign purchases edged up from 15,000 to 20,000 USD, while sales increased from 1.3 million to 1.6 million. The spike in foreign sales on both the ZSE and the VFX, it reflects profit taking, especially as several heavily traded counters, particularly on the VFX, have entered a consolidation phase. Now, on the ZSE, it closed the week with 22 counters in the green, whilst 6 ended lower. Nampak topped the gainers, while Tenor led the declines. ZB Financial Holdings, last week it was the top performer, and this particular week that we are looking into, it remains strong, finishing again among the top 5 gainers. And of course, we can't ignore the two giants, Delta and Econet. Delta edged up by 64 basis points, whilst Econet gained by 2.1%, with both counters closing the week in the positive. Now that their half-year financials are out, we anticipate more increased activity across the board, particularly in both of these counters going forward. The VFX posted 6 gainers and 4 losers this week. FCB topped the gainers, while Padenga led the laggards. Padenga's 15% decline is consistent with our earlier commentary, where we highlighted that most counters that experienced strong Q3 rally are likely to reprice and consolidate, with select counters particularly commodity-linked counters like Padenga experiencing heightened volatility. INSCO, which fell by 47 basis points or 0.47% last week, rebounded this particular week with 5.16 gain, offsetting the prior losses. This alteration between small dips and gains has effectively kept counter trading within their narrow band, preserving its impressive 62% surge, which we witnessed in the third quarter ending September. We saw increasing interesting shifts actually within the bottom 10 of the top 15 ZSE counters by market cap. Firstly, NMB was replaced by FMP at the 6th position. Secondly, BAT was replaced by MASH at the 8th position, and SEEDCO was replaced by AFTIS on the 11th position, following AFTIS' stellar half-year performance. On the VFX, INSCO overtook Padenga for the top spot for the week ending 14 November. This was resulted by Padenga's 15% loss and INSCO's 5% gain. Otherwise, all other rankings below that remained unchanged. Here is our outlook for the week. On the ZSC, we expect both Econet and Delta to remain major drivers of market activity. These two are likely to keep oscillating and rotating between the first and the second place in turnover, but Delta will probably remain on the top spot given the increased transparency in its financials. In terms of price action, Econet is likely to remain more volatile compared to Delta. And perhaps one would ask whether Delta and Econet are buy, sell, hold, and my view is clear. These are strong buys considering our reasonable basis. Prices may look stagnant for now, but that's how markets behave. Those accumulating shares early are positioning themselves for upside opportunities, while those waiting for confirmation of an uptrend often miss the early gains. On the VFX, we expect the volatility to persist with weekly mist of gainers and losers. Most blue chip counters are likely to remain consolidating, trading within their narrow band, with significant moves only occurring particularly perhaps upon major company-specific developments or macro events that directly affect those counters. Otherwise, thank you for your time. Let's touch base on the coming segment. Welcome back to our second segment, where we take a closer look at the published financials of our listed counters and unpack them and share our analyst commentary. Today, we want to take a look at the two heavyweights on the Zimbabwe Stock Exchange. That's Delta Corporation and Econet Wireless, both of them constituting over 50% of the local denominated BOS overall market cap. Joining me on set is my fellow analyst, Ian Banda. Ian, thank you and welcome on set.
It's a pleasure to be here.
Right. Now we want to start looking at Delta's half-year financials for the financial year ending 31 March 2026. Delta released its financials, and if you were to look at the top line, we saw that there was a 32% surge in revenue, including swaps, and if you were to exclude it, that's 21% surge, and recording an overall volumes growth of 11% across its major four SBUs. That's the lager, the non-alcoholic segment, now constituting swaps and the sparkling beverages, as well as cordials, and the sorghum beer segment, and the wines and spirits under AFTIS. So firstly, let's start from there, your overall commentary on the top line performance.
Okay, thank you, Kuda. So Delta actually presented a strong top line earnings growth. I think it benefited from a stable economic environment characterized by, we saw that the currency was pretty stable, with the interbank exchange rate starting at 26.77 against the dollar, and ending the period at around 26.75 against the dollar, actually strengthening. And we noticed also that month-on-month inflation was also below 1%, both for the ZWL inflation and the USD inflation. And the company also benefited from increased consumer demand. This was again buoyed by, we saw that we had a good agricultural year, with the tobacco farmers actually earning around 1.2 billion in total earnings.
Sure.
with a record harvest of around 355 million kilograms. And also our economy is also spurred by mining. So we saw that there was an improvement in the gold price. The gold price reaching an all-time high of around 4,000 per ounce. And artisanal miners actually contribute 78% of total gold output. So this all comes back to the consumers actually giving consumers more disposable incomes as the economic fortunes are turned around. So this resulted in we saw that Delta actually had earned around 514, reaching the $500 million mark in revenue, following the likes of Insco, which we saw that it surpassed 1 billion revenue. So I think Delta is poised to go over that mark come full year, as they've already surpassed $500 million with 32% increase in revenue. Then we saw that volumes increased across the whole SBUs. We saw that lager beer grew up by around 21%, sorghum beer overall 16%, non-alcoholic beverages growing by 11%, and we saw that AFTIS, the wines and spirits segment, growing by close to 43%.
And we touched on this on our previous recording.
Yes. So this, I think, revenue growth was spurred by improved consumer demand and also good prices that meant that volumes increased across the whole SBUs of the group.
Okay, now let's look at perhaps each SBU one by one. If you were to look at the non-alcoholic beverages segment, that's the one where we said that now constitutes the Schweppes, the sparkling beverages, and the cordials. Even if you were to look at other, forms like Maheo, which saw a dramatic rise in its volumes growth by around 247%, right? If so to speak. Now, the main question in this, I think Delta paid about 15 million for the half year ending September 2025. And in the previous half year, it paid about 16.5 million. That's how sugar tax continues to, make a dent as much as weighing the margins for Delta Corporation is concerned. And this is the very same sector that we've seen that, beverages giants such as Delta actually have competition from other players which are not accustomed to such taxes such as this. So I just want to sense your view as far as this is concerned, and likelihood to absorb sugar tax and maintain perhaps affordability in terms of prices is concerned, or any likelihood for margin recovery as we get into the full year.
Okay. I think the group is going to continue to absorb most of the brunt from the sugar tax. This is for them to actually defend their market share and maintain affordability for its products against competitors. In terms of our margin recovery, I don't think there will be any margin recovery in the near term unless there is some regulatory intervention. As we hear from their analyst briefing that they said they are still in engagements with the relevant authorities to actually and either reduce the sugar tax burden or to actually maybe have it tied in such a way that maybe you exempt maybe the first 10 or 20 kilograms grams of sugar maybe from the sugar tax. I don't know how the authorities will come about on that, because the last intervention was around 0.02 US dollars per gram, and it was reduced to 0.001 US dollars per gram. But still, this is a lot for the manufacturers such as Delta, and they are actually competing against imported products from other markets which do not have that tax component or that tax burden on their products. So I think this is something that the authorities have to think about to help companies like Delta actually gain some margins. But without any regulatory intervention, I don't think we'll see any margin recovery anytime soon.
Sure. Looking at the, sorghum beer segment, we saw that there was a growth in domestic market, the poultry growth in this SA market about 1%. But if you were to look particularly in the Zambian market, there was a decline of 41%. And if you were to look even in the prior years, that market has been recording perennial underperformance. Perhaps one is looking into this and is to ask, why is Delta continuing holding on to this Zambian market? We do have the answers. We attended the analyst briefing and we perhaps heard the management perspectives. Now share your thoughts and shed more light to perhaps our audience, why the company is continuing holding on to that market.
Okay, I cannot really say it's a perennial underperformance. Let's look from half-year financial year 2022. This Zambian market was producing around 389,000 hectoliters of sorghum beer. Fast forward to half-year financial 2024, it was at 647,000 hectoliters. So this was actual growth in 3 years. Then it declined to 517,000 hectoliters in FY25. Then the 42% dropped to 307,000 hectoliters. But this has been mainly attributed to the severe power shortages that have been experienced in the Zambian market. Of note, Zambia is actually experiencing around 21 hours of load shedding. So how can a company that actually depends a lot for its processes on electrical power be expected to survive? Obviously, they had to bring in auxiliary power in the form of generators, but their generators have proved to be not really up to the task, with a lot of them blowing up. That was mentioned by their CEO, Mr. Valela.
And if you were to reiterate even the words that he actually said, he said that issues to do with the underperformance in the Zambian market is not from the demand side, but the supply side.
Yes, it's from the supply side. There's a good demand. They are actually failing to meet the demand. This is due to the power shortages. But they actually said they are planning to actually bring in on bigger generators to actually try and complement these power shortages. And the demand is there. So I think it's a market that is worth exploring. And remember, when we had a poor agricultural season from the side of in Zimbabwe, Delta to actually import Chibuku super from the Zambian market to actually try and complement the demand that is the domestic market demand in Zimbabwe. So this shows you that Zambia remains a key strategic
unit, especially with the group's thrust to go regional.
Exactly, it remains a key strategic unit and also if you take a look from the input side, I think inputs are much cheaper in the Zambian market. Your maize, your sorghum compared to the Zimbabwean market. So I think let's give it time. I think I would give it about 2 or 3 years. I think that market would have actually matured enough, and if the power challenges are fixed, we'll see the volume recovery in the Zambian sorghum beer segment.
Okay, now that we have these 4 main segments and looking at their segmental contribution to revenue, lager beer segment continues being the major contributor, now contributing 40% of the top line, with the non-alcoholic beverage segment constituting 26% of the top line, sorghum 26%, and AFDIS the remaining 8%. We saw the lager beer recording 21% surge in terms of the volumes growth for the half-year mark. And for the third quarter of the coming financial year, that's financial year for 2027, the group intends to install another packaging plant for this particular segment. But as we have seen from the news headlines, players such as Faron Beverages, they actually signed a landmark deal with the Carlsberg, right? Yes. So looking at this particular segment, I just want to hear your thoughts. How do you foresee the group faring as far as this segment is concerned, meeting demand and perhaps the volumes growth trajectory? Many
analysts have agreed that companies like Delta actually perform well when there's increased competition. We saw with the coming on of the Buffalo Brew and Grow Insco through its Nyati beer in the sorghum beer business. Volumes in the sorghum beer business for Delta did not decrease, they actually increased. So I think this is going to be the same case in the lager beer. Right now they are producing around 1,546 hectoliters. That is their volume in the past financial year. I think many people are accustomed to Delta Beverages offerings. Yes, with the new player coming in, maybe there will be a few people who will be interested in testing the new kid in the market. But I don't think it will be really a knockoff on Delta's numbers. I think Delta's numbers are still going to increase because they are not yet full meeting. It's the demand that is there in the market. They are still short and they need to expand more in their capacity to actually meet demand. So this is seen the coming up of the Belmont Brewery, which is expected to be functional in Q3 F27, and them also putting a new bottling line at their Southerton brewery. So this means that demand is still there. If you are going to sink in a lot of capex, it means that you see that the market is not yet fully saturated. There's still space for more product to come in.
Okay, let's round up on this counter. Let's look at its share price. It's now trading below 50 cents per share. I know there are ongoing disputes, tax issues, where they got an adverse ruling from both the High Court and the Supreme Court. I mean, is this significant to warrant its current share price? What's your views?
So I think this tax issues put uncertainty on Delta's price, really, because as investors we price in such things. These are high-risk contingent liabilities. In case Delta actually gets an adverse ruling from the courts, it will mean that they will have to pay up, I think it's around 75 million. So this is something that is going to depress investor confidence. But I think also it's an issue of where Delta trades on the ZSC. With the liquidity, tight liquidity we have in the market, there are not really a lot of people who have enough zig to actually pump up the price, because also price is also a function of demand. So I think if there was a lot of liquidity in the market, I would want to believe that Delta's price will be close to 80 cents or to $1.
Okay, fantastic. Now let's move on to Econet Wireless. We saw the group recording a robust top-line growth of 38% to around 502 million USD if we are to apply the average interbank rate for the 6 month ending 31 August 2025. Right, driven by data traffic more than doubling, as well as the voice traffic growing by 34%. Your overall commentary on Econet's top-line performance?
Okay, thank you. I think Econet's top-line performance also benefited from its heavy investment. We saw that they introduced 26 lightweight and cost-effective base stations for the underserved rural communities, those who had difficulties in or poor network connectivity. And they also deployed 27 new sites with 2G, 3G and 4G capabilities. And their 5G expansion strategy also was accelerated with 100 new sites opened nationwide. So this meant that the company now was now offering better service. And with that, we saw that local airtime was up 28% in terms of volume. Data and internet service was up 42%. Mobile money was up 11%, and insurance was up 4%. So, in fact, these are actually contributions to the revenue, not increase in volume. Okay. Local airtime contributed 28%, data and internet services contributing 42%, mobile money contributing 11%, and insurance contributing 4%. So this is diversification in its top line revenue. But we notice that the mobile network operator is still the largest contributor to
contributing
revenue.
around 82%
Yes,
to the total revenue.
to the total revenue.
Of course, we do have other financial services such as the EcoCash, which recorded a growth of 35%.
35% and contributing 11%.
Exactly.
Yeah.
Even the other life policies,
So
EcoSure recording
50%, and Move and Maisha recording 31% and 63% growth respectively in total membership and policy holders. So overall, the group benefited from a volume increase across all its major operating segments.
But MNO continues to comprise the greater part of the revenue. Any likelihood for perhaps dilution with the other segments such as EcoCash constituting a greater part of the top line?
I don't think there will be any dilution in the near term, because mobile network operation remains the core business for the Econet wireless group. Mobile money is facing a lot of competition from Inbox and Omari Financial Services. Maybe if I'm to put it, they were caught napping in that era. They had the opportunity, and they controlled a significant part of the market. But the coming of Inbox and Omar offering better products in a way and more innovations resulted in them losing a large chunk of their market share. But I think they still have the prowess to actually try and regain that market share back. And the insurance services also faces greater competition from established market players. You have your Old Mutual, you have got your Nichols Diamond and all those offering. These are established players already in the market. So it will be a tall order to actually gain a lot of traction. For now, I think the mobile network operator will remain the largest contributor to revenue.
Okay. And management noted that while internal indicators suggest that there is a positive change in its functional currency from ZiG to USD, but they continue to maintain reporting in ZiG due to regulatory requirements, specifically that tariffs are determined by the regulators in the local currency. What's your thoughts as far as inherent tension is concerned for USD and ZiG reporting and the functional currency is concerned?
So they are just following the rules set by the accountants board. They have to take into account IS29. I'm not really an accountant, and I don't really understand how that works. But for us analysts, the ZiG numbers don't mean much. You are talking about revenue in the billions of ZiG, but then when you try to convert it into the USD, their functional currency, you are talking of half a billion in terms of revenue. So there's always going to be that distortion between the hyperinflationary numbers and the actual activity that is happening in the company. So the ZiG numbers will always not give a true picture of what is happening, and this is a tall order for many investors, because now you have to go back and try to convert, try to understand what currency was used, and with the economy being significantly dollarized, I think it will be prudent for them to give us also supporting numbers in USD, or to at least tell us what exchange rates they were using, so that we are more aligned on the analysis. Because you find out that if we take a group of 5 or 10 analysts, we have different numbers for their revenue in hard currency terms. Yeah, so that distortion needs to be looked at. And they have to decide. We are seeing companies that are listed on the ZSC giving us USD numbers and supplementary hard currency numbers to help us in comparability and understanding these numbers further.
Okay, interesting. Lastly, let's keep it off by looking at the investment framework, we saw that they are continuing to show a strong commitment as far as capex is concerned, right? That 12% of capital investment to revenue ratio is a bit fair enough, and we saw that this count is going big on AI. So I just want to get your sense as far as the going concern of the group is concerned.
Okay, them being a mobile network operator and being involved in the technology business,
Sure.
it's actually really prudent for them to go big on AI. My only worry is are Zimbabweans really ready for the next stage in technology in terms of AI? Will the current ecosystem actually be able to absorb and cope with this new era of AI? We know that AI requires a lot of data centers, it requires a lot of processing power. That means we need a lot of electrical energy and things like that. But our economy, I don't think, is ready for that next step yet. We are still very much behind in terms of technological advancement. But I think if we manage to have uninterrupted power supply and we improve our internet connectivity, them already having taken major steps in AI development will be key in their business.
Interesting and fantastic. Ian, thank you for your time, for your company, and for sharing your valuable insights. It's always a pleasure having you on site.
Yeah, thank you very much.
Right. And that's all we have for you, our beloved audience. Thank you for tuning in and for your time. If you have questions, suggestions, and thoughts, feel free to drop your comment in the comment section. That's all we have for you. Myself, our beloved guest for today, and the rest of the team behind the scene. It's goodbye for now, and please stay tuned and do watch our episodes in the forthcoming episodes, and keep your eyes on the market.